Welcome back to Investing Talk Podcast.
Today we're looking at International Business Machines Corporation. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. We have quite a bit to unpack today because International Business Machines, it's not just, the tech story you might think. It's really become this structural transformation narrative.
Absolutely. And our goal here really is to understand this paradox. You have this company often seen as kind of legacy, right? Making these huge technical leaps. And maybe more importantly, how are they actually paying for all these big bets, these moonshots?
Yeah, exactly. And that paradox, it really starts with the financials. The Q3 2025 results, they were genuinely strong. I mean, really surprised the street.
Okay.
They pretty much blew the consensus estimates right out of the water. Revenue came in at $16.3 billion.
$16.3 billion.
Which is a massive 9% year-over-year growth. Now, for a company of this size and history, that kind of pace is pretty exceptional.
Right. That really signals strong demand for their enterprise solutions.
Definitely. And the quality of that revenue growth, that's critical too. If you look at profitability.
Yeah, the EPS numbers.
Exactly. The adjusted earnings per share, it didn't just meet the forecasts. It cruised right past them, came in at $2.65 versus, I think the consensus was $2.44.
$2.65 versus $2.44. Yeah, that's solid.
It is. And here's where you see the efficiency shining through. Their non-GAAP gross profit margin actually expanded, went up 1.2 percentage points to 58.7%.
Almost 59%. And that non-GAAP detail, that's important for you listening to remember, right?
Yeah, it basically strips out, one-off accounting things and lets you focus on the core operational muscle.
So that margin expansion tells us they're not just selling more stuff.
Right.
They're actually managing how they deliver it much tighter than before.
Precisely. Which, naturally, leads straight into the forward expectations. Management didn't just look back.
Yeah.
They immediately raised their full-year guidance. Now they're projecting revenue growth of over 5%.
Over 5% for the full year.
And this is the headline number, really. Substantial free cash flow FCF, around $14 billion.
Wow. $14 billion.
Yeah. And that $14 billion FCF, it isn't just a big number on a page. It's their war chest.
Okay.
It really defines their financial resilience. Our sources are pointing out the balance sheet looks very strong. They have pretty modest net debt compared to that huge FCF forecast. And that cash generation, it more than easily supports the current dividend yield, which is what, 2.19%?
Yeah, about that.
So it makes it an interesting mix, potential for income and growth.
Okay, but that $14 billion, we need to dig into that a bit more. Where is all that cash actually coming from? Because this gets right to the heart of that IBM paradox we mentioned.
Right.
Where did they suddenly find this, massive, stable source of cash flow that lets them fund the future stuff?
You're hitting on the key point that some of the analysis highlighted. The success of the old IBM is basically funding the new IBM.
Oh, okay.
So while AI and quantum, they get all the flashy headlines.
Yeah.
The core strength generating that cash, it's the infrastructure segment.
The old hardware business.
Pretty much.
Yeah.
Revenue there surged 17% year over year in Q3. And get this, it was led by an absolutely staggering 61% jump in their IBM Z mainframe sales.
Wait. 61%, you're talking mainframes. The big iron.
Yeah.
Systems that, feel like they should be slowly fading away.
I know, right?
And they delivered a 61% growth surge. How sustainable is that? What's driving companies to sink that kind of money into, legacy hardware?
It does sound counterintuitive, doesn't it? But the data, it's quite clear. Enterprises are still incredibly reliant on those IBM Z mainframes.
Or what kind of tasks?
Think mission critical, banking, insurance, high-frequency trading, the really sensitive, high-demand stuff.
Okay, makes sense.
And the reason for that huge 51% jump seems to be that these clients, they aren't actually moving away from the platform, they're refreshing them.
Refreshing, like new models.
Exactly. For better security, stability, and often they're linking these refreshed mainframes directly into their hybrid cloud setups.
Ah, okay, so it's not just legacy, it's integrated legacy.
I could say that. And that segment, it's high margin, it's incredibly sticky, customers don't switch easily, and it generates essentially guaranteed high cash flow.
So that's the engine.
That's the engine funding the revolutionary R&D.
Yeah. That makes a lot more sense now. So the stable, sticky cash from the, let's call it the past, is directly enabling these huge bets on the future, which is where the competitive moat is actually getting wider. So let's unpack those two main bets, enterprise AI and that long-term quantum computing focus.
Okay, let's start with AI. Now, international business machines, they aren't trying to build, the next viral consumer chatbot.
No, definitely not their game.
Their focus is purely on the enterprise. And their AI book of business, it's already over $9.5 billion.
$9.5 billion.
Which shows they've already got serious traction in those core mission-critical sectors we talked about.
But here's where, for me, it gets really interesting technically, and where they're trying to carve out a different path from, say, the big GPU players.
You mean the Grok partnership?
Yeah, exactly. That recent partnership, October 2025, with Grok on watsonx Orchestrate, that feels like a potential game changer.
How so?
Well, the source material we reviewed claims this setup offers, get this, over 5x faster and more cost-efficient inference than traditional GPU-based systems.
5 times faster. Oh, okay. That's a big claim.
It is. And that speed difference, it's crucial for you, the investor, to grasp because it hits the economics of enterprise AI directly.
Right. Inference speed isn't just bragging rights.
No, it translates directly into operational cost savings for these big companies. If IBM can genuinely demonstrate 5x speed and better efficiency using watsonx with Grok,
then that creates an instant, very compelling reason for adoption.
exactly, and one that potentially bypasses some of that heavy NVIDIA dependency everyone's focused on.
Interesting angle. Okay, so that's the short to medium term AI story. Now let's pivot. The deep future, quantum computing.
Right. This is the ultimate high-risk, maybe high-reward bet, but they are making tangible progress, it seems.
They absolutely are. They've got this multi-year strategy, and it's aiming for a really huge milestone. The world's first large-scale, fault-tolerant quantum computer by 2029.
2029, okay.
And this isn't just some, R&D pipe dream. It feels like a commercial deadline they're setting for themselves.
And what gives that goal some teeth, some credibility, is that breakthrough they announced back in October 2025.
The error correction one, using AMD chips.
That's the one. For anyone listening who isn't deep into quantum error correction, it's kind of the Achilles heel right now.
Totally. If the machine can't reliably stop errors from messing up the calculation,
then it's basically useless for anything complex. So solving that, or even just making major progress on it, that's not just a cool technical achievement.
no, it's what potentially opens the door to real commercial sales opportunities down the road. It moves it from the lab toward actual products.
That's the so what, exactly. Okay, shifting gears, how's the market reacting to all this? The technical picture, the charts?
Well, the market seems to be buying the story, at least recently. The technical picture confirms that bullish fundamental narrative we've been discussing.
Right.
Shares recently closed at a new record high, $306.57. That was after surging, over 7.5% on the day that quantum news and the strong earnings hit the wires.
Big jump.
Yeah, and that price action, it confirms a solid bullish trend. The stock's trading comfortably above both its 50-day and 200-day moving averages, key technical signals.
Right. What about momentum indicators, like RSI?
Good question. The Relative Strength Index, RSI, it's sitting around 66.
66, so strong but not crazy overheated.
Exactly. It signals healthy buying, good institutional momentum, but it hasn't quite tipped into that overbought territory where you might expect exhaustion to set in.
Okay. Are there key levels we should be watching? Resistance, support?
Definitely. Keep an eye on the immediate resistance right around $310. A strong push past that level would really confirm conviction.
And if it pulls back?
The next sort of technical target, if it breaks higher, is maybe the $325 zone. On the support side, if there's a pullback, the first area to watch is maybe $288. That was previous resistance. And the major pivot point, that's further down around $260.
Got it. $310 resistance, $288, $260 support zones. And what about investor sentiment generally? Analyst rating?
Sentiment seems overwhelmingly positive right now. You saw major banks like Evercore ISI reiterating an outperform rating. And crucially, they specifically called out quantum computing as an underappreciated catalyst.
Underappreciated, okay.
Which suggests they clearly believe the market is still maybe valuing the company too much on its legacy structure, not enough on this future potential.
And insider activity, management holding on to shares.
Yeah, sources indicate continued retention, which usually suggests management confidence in the strategy.
Right. And we can't ignore the speculative buzz either, can we? That's often a strong indicator of market psychology.
True. There are those rumors swirling about a potential, what was it, $500 million AI partnership?
Yeah, with some unnamed Fortune 100 client, that would be huge validation for that grok speed advantage if it actually happens.
Absolutely. Plus, you keep hearing that recurring market chatter about a potential spin out of the quantum business.
Right, the spin out idea. It keeps coming back.
And the thinking there, which Evercore kind of alluded to, is that if they separated out that extremely high growth, potentially high multiple quantum segment.
It could unlock a ton of hidden value.
Exactly. Value that the stock just isn't capturing right now under that big traditional enterprise IT umbrella.
Okay. So looking ahead, what are the immediate sort of short-term catalysts we should be watching over, say, the next 3 months?
These next few months look pretty critical. The next major event is the Q4 2025 earnings announcement. That's expected sometime mid-January 2026.
And expectations are high.
Yeah, the consensus is already looking for another double-digit year-over-year revenue gain. So another strong report there could be a major trigger for more upside.
And besides earnings.
We need to track that commercial validation of the grok speed advantage we talked about.
Right. Seeing if more big clients sign on.
Exactly. The potential scale out of that grok partnership to more Fortune 500 companies in the coming months, that would really confirm their unique AI approach is gaining real traction in the marketplace.
Okay. Now, we've painted a pretty positive picture, but for a balanced view, we absolutely have to talk about the risk. What are the potential downsides here?
Good point. Got to stay grounded.
Yeah.
The main internal strategic risk that gets noted in the filings is actually the deceleration of Red Hat's growth.
Ah, Red Hat, the big acquisition.
Yeah. In Q3, Red Hat growth was 12%. Now, that's still good growth, but it was down from 14% in the prior quarter. It's not a massive drop, but it does raise the question, is that core hybrid cloud growth engine starting to slow down a bit as they maybe pivot resources towards AI and mainframes?
That's a really fair challenge because Red Hat was supposed to be the engine of their whole hybrid cloud strategy, right? If that starts showing sustained weakness, it definitely complicates the overall transformation story. You start wondering, are they sacrificing some future cloud dominance for these immediate mainframe gains?
It's a valid question. The context, though, is their diversification.
Right.
While, yeah, there's inherent concentration risk in mainframes and maybe some software areas,
Right.
the aggressive push into consulting and AI that's specifically designed to mitigate that dependence over time.
And what about broader market risks? You know, if the whole tech sector takes a dive.
Well, look, a general tech pullback would almost certainly hit the stock, too. Can't avoid that entirely. But the argument is that IBM's business mix heavy on those multi-year mission-critical contracts might provide a layer of defensiveness compared to, say, pure-play growth names that are more sensitive to economic swings.
Okay, so let's try and bring this all together. A final investment thesis. It seems like International Business Machines is, right now anyway, executing really well on that paradox we started with.
Yeah, I think so. Using its stable, cash-generating past to really fund this potentially cutting-edge future.
So our overall rating.
I'd say strongly bullish, based as what we're seeing. You've got momentum from really exceptional revenue performance recently, positive technical signals on the chart, high institutional confidence, judging by analyst ratings and commentary,
Right.
and these structural growth drivers in AI and quantum that arguably the market is only just beginning to fully price in.
So this makes the stock potentially attractive for you, the listener, maybe if you're looking at the short-term catalysts.
Like the Q1 2026 earnings, or more news on the grok front.
Right. And maybe especially attractive if you're investing for the longer term, you know, betting on that structural tech leadership and the whole quantum vision playing out over the next 5, maybe 10 years.
Yeah, it's essentially a bet on institutional IT stability meeting, potentially revolutionary future technology, a unique combination right now.
The big question isn't just whether the quantum future is real, but how much hidden value the market is assigning to that technology today, especially given the continuous talk of a potential spin-out. If that spin-out happens, the investment landscape for this company changes overnight.